So how are we doing today? That inflation data was very good and we're halfway there. So we're going to check in on how we're doing right now, and then tomorrow I'm sure when the Fed come out with their interest rate hikes, we're going to be talking about that. I always have a lot more confidence when I come to the inflation part, not so much confidence that the Fed ever go to make the right decision. So we'll talk about that in a little bit. But let's just really quickly, I actually just wanted to make a really quick point before I get on to this. I just want to say I made a video earlier just talking about Damien Talks Money and just trying to give him a little bit of support. And I was just absolutely shocked to see that there was one or two comments of hate on that video. And it just showed me, like, unfortunately, how great the YouTube scene can be sometimes. There's just idiots that come onto this scene, and even with something like that, there's just abuse going down to a content creator that is trying to show support. And I've realised that in the last kind of few months. That's where I've kind of changed in the last few months. And I don't know if it's just because of the bear market, people feel like they can give you abuse on this YouTube scene and abuse in the comment section. And it always reminds me of this quote about pigeon, and it's very similar trying to argue with a stupid person, is that you can never play chess with a pigeon. The pigeon's just going to knock all the pieces over and then we'll say the word all over the board, then strut like around like it's won. And I feel like that so much. I feel like that it's crazy on this scene at the moment, that I don't know if it's because it's just the bear market, or it's just it allows people that enjoy having sending out abuse because it's free content allowed to come on this comment scene and just say awful things in the comments, especially when it's something that was a supporting message. And I've just personally found, and I never thought I'd do this. I never wanted to block people on the YouTube scene because I think people are entitled to their view, but it's just got to the point where I see this quite often, where there's just this toxic and abusive comments in the comment section. If there's anything like that now, I just straight block up people because it's just wasting time and it's just making it a negative vibe. So I've just noticed that personally anyway. So I just wanted to kind of say that. But yeah, getting on to the stock market and inflation. Obviously another really good day in the stock market, and the reason why, inflation came out and people are shocked that it's dropping rapidly, even though we've been pointing this out for a very long time on this YouTube channel. All of a sudden there's a lot of investors going, oh look, inflation's dropping. Now I do think when I looked at the stock market in the last couple of days, I think someone did get that inflation data a little bit early, especially on Monday, because Monday was a very good day. So I think a few people kind of knew that the inflation data was going to come in very positive, and I think that was already priced in. So we're not seeing as good as a jump today, because I think the people that knew it was good did buy on Monday. It's that sort of thing does go on in the stock market, don't you worry. It's sometimes where you see a stock dropping for no reason, you're like, oh, why is the stock dropping for no reason? And then they actually come out with some negative news, and it's not down as much as what you think, or it's not down at all. And like, looks like people already knew about that. It does happen in the stock market, believe it or not, in this day and age still. But yeah, on the inflation point of front, we went from 4.9%, and we were expecting, let's not forget, only 2 weeks ago, it was expected to come in at 4.7%. And then about a week ago, it got then downgraded to 4.3%. And then even some analysts came in at 4.1%. And it beat them. It actually came in at 4%. Now, I was praying. I was like, are we going to see a 3.9? That's what I was praying for. I thought we could see a 3.9 this month. And we were close. We were 0.1% off. I mean, if we got the threes, that would have been absolutely amazing. But don't worry, the threes are right around the corner. And you can see here that at the moment the forecast out is 3.6%. So it's forecast to have another big jump when the June data comes out in July. So we are going to see the freeze very soon. And obviously 3.6 would actually put us around only 0.7% off entering that 2% range. So we are pretty much nearly there on the inflation front. And that's why we've seen the markets. This has been a major issue in 2022. And this is why we've seen the markets do very well in 2023, and why we saw the start of the stocks starting to put a bottom in through that bear market in 2022, and we're starting to get there. We're starting to enter a bit of a better phase in the stock market, and I'm sure you guys have seen it. I've seen it in my portfolio. We've had stocks starting to put some rallies in. We're starting to see the stock market rally a little bit because of this issue being resolved. And the really good thing is true inflation. We saw that true inflation, we started to hit the freeze during that May time, around the April time. The normal inflation metrics that are used are quite lagging metrics. So when we're actually in the fours, we are more likely in the threes. And when we're in the threes, we're more likely in the twos. And that's why when you look at true inflation, this is actually in the 2.74%. We are going to hit the 2% range. There's no doubt about it. We're going to hit 2% this year. It's just a question of when are we going to hit it? Are we going to hit it in September? October, November. I think we will have hit it by December. So it's more of a question when that's going to happen. And when you look at true inflation as well and how rapidly that did drop through the month of May into the month of June, I generally think that with this 3.6 you see right now, I wouldn't be too surprised to actually see us moving towards a 3.4, maybe even a 3.3. We could see another rapid drop in inflation, and then we're talking about we could see potentially the 2% range by summer. We were talking about, are we going to see 3% by the end of the year? Potentially maybe 2% on December time. We potentially could see this by summer, and it's so exciting. That's why the stock market is getting so excited at the moment. And obviously this has come down rapidly what everyone was thinking. Even I was bullish on how much the inflation was going to come down this year, and it's even better than what I'm thinking, which is absolutely fantastic. Also, what's helped in the last few days is that the S&P 500, a lot of that has been weighted towards certain stocks. You guys probably know the S&P 500 is actually weighted more heavily towards the 10 largest stocks. And a lot of them 10 largest stocks are the likes of Google, which has been rallying, Microsoft in particular, Apple, and Nvidia as well. So the S&P 500 has looked very good this year, but actually when you take them sort of stocks out, it hasn't performed too amazing just yet. When you look at the smaller caps, you might have noticed this as well, is that really, I've seen this in my portfolio, is that I don't know if you remember around June time, we saw a bit of a rally, then we saw a bit of a pullback. We saw a bit of a rally towards the back end of the year, and then we saw a bit of a, by the same time, we saw a bit of a pullback. At the start of the year, we saw a bigger, a big rally at the start of the year. And then really since March time, my account hasn't rallied as much as what the S&P would suggest. And if you look at the small caps, the Russell, for example, that would make sense when you look at the share price movement here. Same with the S&P 600, that's very similar to the Russell. The move very similar. And I don't know if you guys feel this, like really my account has kind of been stagnant for coming up to 2 years now. Since 2021 or the summer of 2021, my account has been a bit of a time frame, and it looks very similar to what's going on with the Russell. And it's saying when you look at the S&P 600, that, like I said, very similar to the Russell. It's a very, it's not really done much, and that feels the same, a bit of a reflection into my account. But the difference is that in the last kind of couple of days, we've seen the S&P 600 wake up, and we've seen a bit of, it's in the last month, it's up 7%. We've seen the Russell, in the last month, that's rallied up 7.5%. So when the S&P in the recent months has been rallying, and most that's dedicated because of the few stocks and the whole AI situation, my account hasn't been lifted up as much as what the S&P would look like. But recently, it's looking a bit more attractive, and that's obviously when you look at the Russell, you look at the S&P 600, we are starting to get them few more stocks lifted up in the whole market, rather than just a couple of stocks lifting the market up and looking better than what it is, and that's obviously been really positive. And when you look at the average forward P here right now, you look at the S&P 500 large caps, that looks pretty fairly valued. Obviously, a lot of that is because of them stocks that have been lifting up that S&P 500 that have a heavy weighting are trading at a lot fairer valuations. That's one thing to be considering. Don't say that the S&P is overvalued just because a few stocks are overvalued. That's a key thing to be saying right now. But the S&P 500 is still historically very cheap, the mid caps there. And when you look at the large caps, the small caps are still historically very, very low. And that's why I am very, very interested in those small market caps, because I think they could potentially perform very, very well when they do decide to wake up. Now, obviously, 24 hours, we'll be back here. We'll have what the Fed are doing. The Fed at the moment, the projections at the moment are moving around rapidly. So at the moment, the Fed future rates now show 100%, obviously we're waiting for the CPI to come out. Now the CPI has come out, the Fed futures are now predicting 100% chance of no Fed hikes. So obviously that is what we want to see. We want to see a pause, and it should happen. The Fed have been very slow to react. You want to be forward thinking, not reacting. When you get there, and the Fed have been pushing it. I think the Fed should have paused last meeting, the meeting before potentially. I think they should have paused maybe 1 or 2 meetings ago. Now they're doing it now. Once again, they've been a little bit slow to react to that, but it's good to see they are doing it. Now, this is the crazy thing. The Fed futures are now actually predicting that in July, when the next meeting happens on 26th of July, the futures are now actually thinking there is 64% chance of a Fed hike happening again, which is crazy to think about. A pause and then a hike, and then they hold it steady, and then in 2023 we start to see the first cut coming in, followed by a couple more cuts throughout that time frame. I've got to say, I think this would be absolutely crazy to see a rate hike in July, because by July time we'll have the next batch of inflation data. What are we going to be at? 3.6, 3.5, 3.4, 3.3? This would be crazy. They're only going to be 0 point something percent off the 2% target. So to hike it up would be absolutely mental to see the Fed do it. Now, don't get me wrong. I have no confidence in the Fed. I think they have made terrible decisions so many times. So it could happen, but it would be the wrong thing to do. And more than anything, I think we should be looking at cuts more towards this back end of the year. So we'll see what happens. It's very important to say that the Fed rate futures swing like crazy. They can go from one side to the other side. We've seen this year where they've factored in, I think, like 3 cuts this year. We've gone to the point of view where there's no cuts this year. These move so much. Like only the other day we were talking about, I think it was for this month, there was like a 60% chance there was going to be a Fed hike this month. And that shows you how rapidly they change. So I would take this massively with a pinch of salt at the moment. But that's kind of where we are, and I just wanted to share with you guys just for a bit of reference on what people are kind of thinking out there. But it just show you how rapid things can change in there. But hey, on to the next one tomorrow. I think the Fed should pause. I think more than likely what will happen is Jerome Powell will play the hard game, he'll say we are pausing, and everybody will be excited about that. And I think more than likely what will happen then is he'll kind of leave it open for still potentially another rate hike, and the market will hate that and sell off. That's what they will do. I don't think he'll come out and say that's it, we're done. Obviously the market, if he came out and said that's it, we're done, obviously the market will react really positive for that, because as I showed to you was it yesterday or the day before, when the Fed stop hiking up interest rates, that's normally a very good bull market, where the bull market returns very, very good returns from there, and that's what will get investors really excited. So we'll see. It's all up in the air at the moment still, especially when it's Jerome Powell. But we've got some good news today, and we'll take that victory and move on to the next one. So yeah, hope you enjoyed the video as always, guys. Catch you in a bit.